Hello, I'm Donnie McMahon and welcome. Thank you for joining the show. Today I'll be joined by my partner Bill Hatter and two of our trusted team of insurance professionals, Ms. Tara Jones and Ms. Kim Hinton. We're going to discuss some of the ways we help businesses and homeowners understand their risk and evaluate the coverages they need and options to protect themselves.
When an illness or injury becomes an emergency, the ER team at West Florida Hospital is here to provide you the highest level of care. At West Florida, we monitor our wait times so we can meet your needs in a timely manner. You can check our wait times on our website or by texting ER to 23000. West Florida is also the only hospital with all private rooms and the area's only accredited chest pain center. For any emergency, choose the ER team at West Florida Hospital, where your emergency is our emergency.
Welcome back. I'm here today with Ms. Tara Jones, who is one of our commercial agents, and also Bill Hatter, a principal in our firm. And today we're going to talk about what we're seeing out in the business world of insurance and what we do proactively to help businesses. And so I'm going to start with Tara. And Tara, you know, often you go out in the market and you come back and debrief with me when you've met with a potential client, and typically discuss three problems that you see with their way their insurance is put together. Could you kind of tell us about that?
Sure.
And what proactively you do to correct that problem?
Absolutely. Three of the things that we usually find as errors on the policies would be inappropriate coverage for building limits.
The limits are too low?
That's correct. Usually the limits are too low. The agent hasn't been out there to address on increasing limits or changing if they've had any type of renovations or anything that's going on with the business. Typically the policy is just renewed year to year and these things are not evaluated. And so we always take a look at that to make sure that when we go out to quote it, that it's going to be properly insured. Another thing that we find errors on are the business interruption coverage. A lot of times the gross sales or the expenses do not match up to what the business interruption is on the policy. And so we have to review that with the bookkeeper as well and usually change those limits to match what the exposure is.
So what during the year do you do proactively to help them on the renewal to keep up with that?
Well, we meet with the client multiple times throughout the year depending on what they would like, and we take a look at what their sales are and their expenses, and we just review that figure each year as it comes up to see if it needs to be adjusted up or down to match their needs. And then we also talk to them about how many months they would need the coverage to cover them for, you know, anywhere from 3 to 12 months. And then we send those bids out to market to see what we come back with.
So you're there to provide them plenty of options. I mean, I guess it's your job to identify what the problem might be, and here's what we can do to correct it. And then you take that corrected value, you go out to the marketplace and shop the coverage for them. Absolutely.
And a lot of times what we're finding too is companies will be with Citizens, which doesn't offer business income coverage for wind, and this has never been looked at previously with the agent, and the market has changed. And so we're able to find this coverage for clients, and so they can make a decision on whether they want to move forward and purchase that piece of the policy, or if they want to stay with without having any coverage at all.
Yeah, I agree with you. What we see is that if it's with Citizens, there's no business interruption for the wind.
Correct.
And that puts them in a very difficult position because in the event of a loss or a shutdown, they have continuing expenses, they have continuing payroll, and these are needs that have to be met. Mortgages have to be paid.
Or other properties or locations that aren't covered at all. And this just comes from a lack of having the policy reviewed annually with their agent. Things are not updated, and so oftentimes locations could be added, scheduled equipment could have been added, or should have been added and wasn't. And so there's an exposure there as well for the clients.
Right, and sometimes to be overpaying if the equipment is not valued correctly or adjusted based on current values, correct?
That's correct.
Because the policy is just going to pay retail value, not replacement on some of these.
That's correct. Usually
so they're overpaying, basically.
Right, so it could be actual cash value and it's not replacement cost, and you've got a $100,000 piece of equipment. That's a lot of money at the end of the day that you're paying for that you shouldn't be.
So a good proactive approach to get them to react, instead of them calling you, you're calling them and asking them, you know, what's your schedule? Do you have this piece now? Is it gone? Or have you added other things? And in that way, they don't have what we call a gap in coverage. In other words, no coverage and they're self-insured. In the area of audits, we always talk about audits, and my joke is that all audits are wrong and they're all in favor of the insurance companies. And what do you do proactively? What could you do right now today to help a customer see if they have a correct audit, and if they don't, how would you correct that and help them get money back?
Absolutely. Well, oftentimes what's reported to the insurance carrier are the gross payroll. And what clients don't realize is there can be limitations on payroll based on the officers or the payroll of individual employees, depending on the carrier and the classification of business. And so what we can do is look at the payroll that's been reported to the insurance company and go back and see if there's any ways that we can cut out some of that cost, and so that way you can re-report it and lower the premium for the clients.
So what you're saying is maybe the gross payroll for everyone is $600,000, but when you look at the limitations, it might be only $400,000.
That's correct.
So what you can do is order the worksheets from the carrier, look at it, and compare it to what the books, 941s or whatever way they're tracking it, and if they don't match up, you can make a recommendation, and that can be sent back to the insurance company?
That is correct, yes.
And they will correct it and forward the premium?
They should, yes.
Well, that's a great savings idea.
Absolutely.
And Bill, I'm glad you're here today, because one of the things we want to talk about are claims and how this agency is proactive in the claims. Could you tell the audience how negatively it would affect a business if their claims were over-reserved, and really what does reserving mean?
Okay. Yeah, every client needs to make sure they understand their claims, what's going on from the day one till it's closed. They need to know how much the insurance company set aside. A reserve is basically how much the insurance company is guessing that they're going to pay out on this claim. So they can set the number whatever they want to. So if the company's having a really good year, they might want to set that reserve a little high so they don't have to pay taxes on income, so it's set aside. That negatively affects each insured, because when you look at the insurance company, they look at you and say, okay, you paid this much money, we paid out this much money, and they look at our loss ratio. How much dollar for dollar did we make off you, or how much we lose off you? If they look like they felt like they lost a lot of money off of you, they're going to jack your rates up. So we need to make sure that that reserve is right, it's correct, it's a real number, and not something they've arbitrarily pulled out of the air and stuck against you, because it's going to affect your renewal rates.
So what do you do proactively to make sure that reserve is correct?
We sit down with clients a couple times during the year, at least once, and look at each claim, see what we think it is, if it's closed, if it's not going any further, call the insurance company, pester them till they get a real number set up, or they close it or whatever, to get that reserve off the books or whatever they need to do to make sure it's a correct number based on that claim.
Yeah, I really don't think people understand that. And when you try to remarket the account with another carrier, they're looking at that reserve as a negative thing.
Right. Yeah, they
may not give you as much of a discount as you would if the reserve was lower.
Yeah.
Because they're looking at that, loss ratio.
Now, you could have a claim that's really worth $25,000, and they've got a reserve for $100,000. When the company goes to look at it, they're going to look at it and say, oh, this guy's really bad. He's lost $100,000. When really, in actuality, in a year or so, it's going to drop down to $25,000. So you need to make sure you stay on top of that reserve number to keep it down as low as possible.
And if it's a work comp claim, that can be a double whammy, can it?
Yeah, because it not only affects that, it also affects your experience mod, which is your modification based on your experience, on how good you do in the insurance for your workers' comp. And so you get, not only do you get hit with rate increases, but your individual rate goes up.
I see. So being proactive behind that, making sure the reserves are correct, or if they've been eliminated, they're not reported, that go against you negatively, is something you do on a regular basis, and the agency does too. Yeah,
we do. All the agents here, we meet with our clients regularly and go over those and look at those and look at all the claim reserves and see where they're coming from and where the numbers are actually, what's real and what's not, and try to make them as real as possible.
Mm-hmm. Now, I wanted to ask you a question about the state of Florida has taken a stance to remove policies from Citizens and place them in what we call non-rated, AM Best rated carriers. What do you see, what type of companies do you see going in there, and has it been a negative effect for them or a positive effect for them? Or what are your fears behind that for the consumer?
Oh, I have a huge fear. The big fear is you got all these new insurance companies out there who don't have a lot of money to pay claims. They don't have experience. They've never gone through the storms. We've been 7 or 8 years now without a big storm. These companies don't know what to do. They got very little cash reserve. They're depending on the state of Florida to back them up financially. And if we have a big storm, or we have another 2004, 2005 year where you have them back to back, they don't have enough money to pay all the claims. So the money's going to fall back on the taxpayers. That's great for Citizens because their population's coming down, which is what they want to do, but they're putting them to companies that really don't that scare me financially, because I don't think they know what they're doing. They haven't been around enough. They're not financially strong enough. They just don't know Florida. They're too new.
And so someone's biggest asset, which is their home, is subject to being forced into those carriers. But we see we can remarket a lot of those accounts and put them in a better carrier. I mean, that's what our people do here. And that's the reasoning behind it, because the last thing a customer wants to know is their insurance company can't pay their claim. And for most people, that is their biggest asset. Is that what you noticed?
It is their biggest asset. We went through Ivan with one customer who had the company went belly up. And we had tried to move the guy a couple of years before, and he liked the company. We kept telling him we didn't. He wanted to stay there. They went belly up during Ivan, and I dealt with him and the receivers out of Tallahassee, and it was a nightmare.
How long did it take you to settle that claim?
It was over a year, and it was a pure nightmare. And they fought tooth and nail. They didn't want to pay anything. So we just don't want to put our customers through that. So you've got to be sure that the companies that we use, we feel comfortable, have got enough cash there to pay claims when something does happen.
Mm-hmm. And there's state websites you can go to look up their history and so forth, and you help a customer do that also.
Oh yeah, and what's surprising is most of the ones you find, they were formed in 2006, they were formed 2010, 2011, they were formed last year. I mean, it's just they're all over the place, and they just scare us to death.
Well, thank you, Bill. I think that's good information for the consumer to hear. Not all of these so-called takeout companies are bad companies.
No, there's some very good ones in there, and they're financially strong. They're run by people who really know what they're doing, and that's the ones that we try to do most of our business with. But there are some that's kind of been forced on us that we really don't feel comfortable about using, and that's the ones that concern me the most.
And you use every option you can to get them out of that particular company.
Yeah, we do everything we can to keep them from companies that we don't feel comfortable with.
Well, good. And now we're going to take a quick break, and we'll be back to talk about homeowners insurance and some personal lines issues that we're seeing in the market today.
In today's world of high-cost healthcare, we believe in high-quality patient service with careful consideration for affordability. Dr. Paul Brooks is dedicated to providing the latest technology in foot and ankle care. Whether you're suffering from heel pain, fractures, discolored or ingrown toenails, or sports-related injuries, Dr. Brooks can help.
Hi, I'm Paul Brooks, and I'm dedicated to helping people have healthier lives through having healthier feet. If you're having trouble with your feet, I encourage you to make an appointment to discuss your options and let us give your feet the care they deserve.
Okay, welcome back. We have Miss Kim Hinton, who's joined us today. And Kim's one of our top personal lines agents in the agency. And she covers the territory roughly from Panama City back to Pensacola and all the surrounding areas. So I asked Kim to come in today, and we're going to talk a little bit about some of the issues that we're seeing and how she's able to help a customer navigate through those issues and save money on their insurance, etc. So Kim, welcome. And the first thing I wanted to ask you, earlier in the show we talked about the necessary requirement by an insurance company to insure for replacement costs on their home versus market price. Could you kind of tell everyone the difference of what that means?
Yeah, absolutely. A lot of people get really confused whenever they call in and they've just purchased a house and, you know, they paid X number of dollars for it, but yet whenever we give them the insurance quote, it's for a much higher amount, is showing the replacement cost on the home. The insurance policy, how it reads, if you go through and read into the policy, it states that you have to be insured at 100% for replacement cost. So even if the home is brand new, those contractors purchase things at a bulk. Mm-hmm. If something happens to that home, whenever they go to rebuild or go to replace, they're not going to be able to get those building materials at that bulk cost again. So you've got that increase. Another thing you've got is the cost of demolition. It's always going to cost more to rebuild something that's already there versus starting from scratch.
Okay. And so how are you able to clear that out, clear that subject up with a customer?
Well, I mean, what we do is we get all of the information on the home. We get the square footage, what kind of upgrades do they have in the home, how many bathrooms, the garage size. We put all of this information in. Each one of the carriers have a system that we put all the information in, and it gives us a replacement cost. So
in doing that, you're not only doing a proper survey of the home, but you have the software to calculate what that real cost would be.
Exactly.
Based on current dollars today, right?
Right. Exactly.
And if there is a loss, then they're guaranteed to get 100%. Florida
Right.
is a value policy state, which means whatever stated on the policy, they're guaranteed to get at least that. But in some instances, they can get an increased cost.
Exactly. I mean, and the policies, generally what you're going to find also is an ordinance and law coverage. You can buy 25 up to 50% coverage for that. And how that works is, comes going to play a couple of different ways. If the home is a total loss, and say you have the 25% coverage and the home was built in 1980, obviously the building codes from the 1980s versus current have changed a lot. So they have an additional 25% coverage over and above whatever their homeowner's policy limit is for any building code changes. Another way that could come into play is, let's say if the home is damaged at, you know, a percentage, and the building ordinance on file states that anything over whatever the percentage says on the ordinance has to be completely torn down and rebuilt.
No choice.
Exactly. So there's an increased cost there. So it could also come into play there as well.
Well, you know, the state, I guess several years ago, passed a new law that people didn't have to buy set limits on their contents and additional living expense. That's part of a homeowner policy.
Right.
Do you find most people are not aware of that?
Exactly. And it just comes with reviewing your policy every year with your agent. There are constantly things changing. Some of the carriers you can go through, and all those little built-in coverages, like with your contents, you can adjust that up or down based on your needs. Mm-hmm. There's no sense in paying for more than what you need if you can adjust that down a little bit.
So Kim, what are some of the endorsements? That means additional coverage you can add to the policy?
Exactly. For example, most of the policies now, some you're going to pick up and you'll find that they come with whatever the amount of coverage you have on your dwelling, you'll get an additional amount for any other structure. So fencing, sheds, anything like that that may be on your property. Some of the policies come with 2% of the dwelling limit, some give you 10. There's an endorsement on most policies where you can increase that if you need a little bit more coverage. You may have a detached garage that's really nice, and then, you know, also a privacy fence. So those are some things you need to look at.
What if you don't have any of that?
Then also you could possibly either reduce that down as low as possible. In some cases you can remove the coverages altogether.
So that would save them some additional dollars.
Exactly. Also, replacement cost coverage on your contents is something that's not automatically included in the policy. It's an endorsement that has to be added on, and we strongly recommend that that be done on all the policies.
They could be penalized in what way?
Well, let's say lightning hits your home and it gets all of your televisions. If you have actual cash value coverage, when the claim adjuster comes in, they're going to take those televisions and they're going to say, okay, they're 5 years old. They're going to depreciate them down to what the current value is on those televisions, versus if you had replacement cost, they will be replaced with a like, make, and model. I mean, it can be a huge difference in your claim.
Yeah, I can see that. Personal liability.
Yes.
Talk about the options there and why that's important for an individual.
Right. Your homeowner's policies, the standard policies, come with $100,000 for personal liability coverage. What we try to do in our agency whenever we go to write a policy is we automatically bump those up to $300,000. The additional cost is very minimal, and if something happens, you want to have as much coverage possible to make sure that you've got enough there to protect yourself and your assets should someone get hurt on your property.
Plus the cost to defend you.
Absolutely.
Could be very high.
Right. That $100,000 could be eaten up quickly just for that.
So if a person wants more than $300,000, what do you offer them?
Well, then you can turn around and look at buying a personal umbrella policy, which would actually extend over your home and any autos, boats, any recreational vehicles that you have. You can purchase increments of $1 million, starts at $1 million and goes up from there.
Is it an expensive coverage?
It's not expensive at all. In most cases, you can purchase a policy for less than $500 a year.
You often tell me sometimes you'll have them raise their collision deductible, for instance, and use the savings to buy an umbrella.
Right.
So the net cost is the same, but they walk away feeling a lot more protected.
Exactly. It's really a matter of sitting down with that agent, because there's things on there you may be paying for that you don't need. I have people calling in all the time that, they have a towing you know, where they've joined one of these auto clubs that pays for roadside assistance, and then they're paying for it on their policy as well.
So they're double paying.
So they're double paying.
So you really need a thorough look-see and a relationship where you have the time to be able to do that for them.
Exactly.
Or our staff does.
Right. Which
Very
is one of the
proactive.
reasons we contact our customers every year at their renewal. We review their coverages. I check the other carriers to see if maybe it's something that we need to remarket. You know, their situation may have changed. They may have youthful drivers this year, or maybe they don't have youthful drivers that they had last year, where we need to go back and look at the other markets and see that maybe it's better for them to go with another carrier at their
So
renewal.
if you don't do it, who's going to do it for them?
It doesn't get done.
Right. Let's talk about uninsured motorists. In Florida, unlike Alabama and Georgia, they have mandatory bodily injury and property damage liability. We have Florida no-fault PIP coverage, but it doesn't cover lawsuits covering bodily injury if someone sues you for their damages. How does uninsured motorists work in your benefit?
Well, uninsured motorist coverage, whenever you go to buy a personal auto policy, the liability coverage that you purchase is to pay for other people for their bodily injury, their wage loss, whatever the case may be. But the uninsured motorist coverage actually covers you.
And your family.
And your family. It can kick in, you know, your PIP coverage is only $10,000. That can be gone in a heartbeat. So then you've got this uninsured motorist coverage to fall back on, you know, for any wage losses, extra medical care that you may need.
What if they're permanently disabled? Is it?
Exactly. It could come into play for that.
So we have so many uninsured or underinsured drivers. You recommend them take this high limit as they can on that?
Absolutely.
And what is that limit?
Well, I mean, we start at a minimum of $100,000 per person and $300,000 per accident. Same with the actual liability coverage on the policy. Most people, we pick up a policy and they've got $10,000 a person, $20,000 per accident, and $10,000 for property damage coverage, which covers other people's property. You can't even go buy a new car anymore for $10,000. So if you had an at-fault accident and you caused more than $10,000 in property damage, you're paying for the rest of that out of pocket.
They're probably going to have a judgment against you at some point.
Absolutely.
Can you buy uninsured motorists under an umbrella? In other words, if I bought $1 million worth of umbrella liability, will they allow me to buy more uninsured motorists?
Yes, most of the carriers will offer for you to add another $1 million on top of the uninsured motorist coverage. What you do have to make sure you do, though, is have your agent that's going to sell you the umbrella policy or that's looking at an umbrella policy for you, look at all your underlying policies because they require a certain amount of coverage to qualify for the umbrella. So you can't just buy the $10,000, $20,000 auto policy and then get $1 million umbrella.
Yeah, they might require
$250,000, $300,000, it just depends on the carrier.
Well, that's really good information because uninsured motorists really is the only coverage you buy that covers for bodily injuries to you.
Right.
The rest of it, you're paying to protect someone else. You're paying to protect the collision of the car. Real quickly, flood insurance. We're getting a lot of calls. Everyone is very confused on flood insurance. They're upset. Some states are suing the federal government over this. Huge increases. And what could you tell the consumer today about what we are seeing in Pensacola?
Well, the nice thing in Pensacola is there are some areas where we have a problem, but it's, as a general rule, it's not affecting us like it is in other places in South Florida. One of the things that Ivan did do for us is, you know, a lot of the homes had to be rebuilt. Where this new flood laws and rules are coming in are affecting older homes that are in high risk flood zones. So homes that were built before the National Flood Insurance Program came and established in that particular community. It's not by zip code, it's not by county, it's by the actual property address, and they're zoned off in small communities.
So when they came to the market, they said, okay, we're going to let you have flood insurance in this community, but you're going to adhere to our new building codes, which means you no longer can build on the slab, you must build up or elevated.
Right. And so before October 1st, let's say we had a home that was built in 1970 and the community was established with the National Flood Insurance Program in 75. This home that was built in 1970 before October 1st did not have to have an elevation certificate even if they were in one of these high-risk flood zones. They were just given general rates that were preset. Now, if it's a new purchase, they do have to get an elevation certificate, or if there's a lapse in coverage. There's different rules for it, and your agent would be best to guide you on that. But the newer homes that are built, you're okay. The main thing that we're seeing change in there is if it's not your primary dwelling. If you're not living in that home, I believe the percentage is 90% of the time, you're going to see a little bit of an increase or surcharge because it's your secondary or rental property or whatever the case may be.
Bill, we represent many different insurance companies that represent the National Flood Program. Why is it important for maybe a person to have the homeowner company be the same as the servicing carrier for the flood insurance?
Oh, that's simple. The big reason there is if you have a claim, you want one adjuster handling it. You don't want the flood adjuster pointing at the homeowner's adjuster or the homeowner adjuster pointing at the flood adjuster saying it's your problem, not ours. If you have one company, one claim, they handle the whole thing, let them figure out who pays it.
So one adjuster, nobody's arguing, pointing the finger, who did what, they're figuring it out. And after Ivan, we saw a lot of companies that were crossways with each other.
Yeah, the people just standing back pointing fingers saying, it's not my claim, it's yours. And unfortunately, it took a bunch of attorneys to figure it all out in some cases.
So Bill and Kim, thank you for coming today. I think the information was very valuable. And we'd like to welcome you to call our agency and talk to any of our agents for any information you might need to address your insurance needs. Thank you.
McMahon and Hatter, peace of mind.
When an illness or injury becomes an emergency, the ER team at West Florida Hospital is here to provide you the highest level of care. At West Florida, we monitor our wait times so we can meet your needs in a timely manner. You can check our wait times on our website or by texting ER to 23000. West Florida is also the only hospital with all private rooms and the area's only accredited chest pain center. For any emergency, choose the ER team at West Florida Hospital, where your emergency is our emergency.